And it's February 23rd, 2023, 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live on Channels Television. I'm Ladi Williams. It's great to have you join us. Just a few days now to the general elections, presidential and National Assembly elections. Hope you're ready and armed with your PVC to cast your vote on Saturday. But before that now, let's see what's happening with the market. We see oil prices rose slightly in thin Asian trade today, pausing from a 6-day losing streak. Brent crude futures rose by 2 cents to $80.62 per barrel, while the West Texas Intermediate crude futures, that rose 9 cents, about 0.1% to $74.04 a barrel. We'll drill down on drivers of that market later on the show. Moving on to the grains market now, we see U.S. wheat futures fell to their lowest in nearly a month, with Chicago Board of Trade March wheat WH3, that was down about 13 cents at $7.37 per bushel after dipping to $7.33 as the contract's lowest since January 24th. The CBOT March soybeans SH3, that was down about 10 cents to $15.38 for 3/4 of the bushel. And the March corn CH3, that was down about 5 cents to $6.74 for 3/4 of a bushel. And the Association of Corporate Affairs Managers of Banks have denied reports alleging that deposit money banks will shut down their services from Thursday the 23rd to Monday the 27th of February due to the presidential and National Assembly elections scheduled for Saturday. In a statement released, the umbrella body of corporate professionals in the banking sector, they mentioned that no financial services institution has received any directive from the central bank to close their physical banking halls, digital platforms, and online banking channels against their customers ahead of the upcoming polls. ACMB also asked bank customers to disregard the report, as the lenders have put in place measures to ensure that depositors can, as usual, access money in their account during this period. And if you're one of those waiting anxiously for the Supreme Court intervention in the face-off between some state governors and the federal government over the status of the old 500 and 1,000 naira notes, then you may have to wait a bit longer. This is because the Apex Court has fixed March 3rd for judgment in the case. The Supreme Court adjourned the suit for judgment after taking arguments for and against the policy. Early in the proceedings, the 7-member panel of the court, led by Justice John Okoro, consolidated the separate suits filed by Abia and Rivers states to challenge the federal government's policy. Take a listen.
The suit filed by some states challenging the federal government's Naira redesign policy resumes at the Supreme Court, and as usual, the court is filled with majorly lawyers. The 7-man panel of justices led by Justice John Okoro first consolidates the various suits into one, as earlier stated at the last adjourned date. Abia State had filed an application for a joinder and was initially turned down for filing it late. However, the application was later added after the court resumed sitting. The plaintiffs are arguing that the implementation of the policy has caused untold hardship for Nigerians. They want the Supreme Court to set aside the preliminary objection of the Attorney General of the Federation, which is in opposition to the suit, for being in contempt of the Supreme Court order of February the 8th and the directive in President Muhammadu Buhari's speech delivered on February the 15th, as it is a disrespect to the authority of the court. The Attorney General of Lagos State, Mr. Moyosore Onigbanjo, also asked the courts to prohibit the Attorney General of the Federation and President Muhammadu Buhari from being granted an audience until they comply with the order made on February the 8th. He says the policy has impacted on Lagos State and is affecting the government from carrying out its constitutional functions. However, counsel to the federal government, Mr. Kanu Agabi, says all the relief sought by the plaintiff are rooted in Section 20 of the Central Bank of Nigeria Act, and therefore the Supreme Court has no jurisdiction to hear the suit, as the action cannot commence with an originating summons. He adds that Nigerians had already begun rejecting the old notes way before the president's directive. He insists that the president is not in violation of the Supreme Court order.
This policy is one which impacts negatively on the functions of the Lagos State government in terms of our revenue, in terms of our finances. And the government is apprehensive that if this policy is not reversed urgently and speedily, we might witness another serious outbreak of violence in Lagos.
We are looking for solutions. Please, those who have this naira in their hands should submit them to the CBN or any banks designated for that purpose. Nobody will lose his money if you try to comply.
The judgment is set for March the 3rd, after the presidential election and before the state elections.
Everyone definitely begging for direction now with the new and old notes, but we all want supply at this point. Now let's move on to other matters now. So the National Bureau of Statistics have released Nigeria's GDP numbers for the fourth quarter of 2022, with domestic activities growing by 3.52% in Q4 and 3.10% in 2022. Let's talk to Abdulaziz Kuranga now, Sub-Saharan Africa macroeconomic strategist at Quadra Securities Limited. Great to have you.
Thanks for having me, Williams. Good morning.
So the numbers beat Quadra's expectations. That's for the fourth quarter, but on full year, in line with the World Bank's forecast for 2022 growth. How are you seeing all of this?
Yes, for 2022, majorly why the Q4 numbers was ahead of Quadra's estimates was due to more than the expected growth in the non-oil sector, and that was largely impacted by the manufacturing sector during the quarter of review. But overall, in Q4 2022, the growth was primarily driven by the non-oil sector, which remains the growth engine of the economy, as we continue to see the oil sector declining or contracting consecutively in line with the massive oil theft and vandalism. International companies leaving the onshore industry, as well as issues surrounding the decrepit infrastructure in the oil and gas industry. However, for the non-oil sector, the growth was primarily driven by services, where the services grew by more than expectations, and that was in line with the continued growth in trade, continued growth in ICT, and also maintain the maintenance in the growth rate of the finance and insurance industry. So specifically for the ICT, we continue to see increase in voice and data traffic as reflected in MTN numbers. So that's for the telecom subsector, which is the major component of the ICT according to the National Bureau of Statistics. However, even though the agricultural sector grew by about 2.45%, when you compare that number with Q4 2021 numbers as well as Q4 2020 numbers, you will see that this 2.45% growth in the agricultural sector in Q4 2022 was significantly below those previous Q4 numbers, which is at an average of 3.43%, and that is showing that that is likely showing the impact of the flooding incidents that we saw during the primary harvest season between September and October, of which we saw news flow saying that about 35 out of 36 states were impacted by the flooding incident. So even though our agricultural sector grew by 2.45% compared to about 1.34% in Q3 2022, when you compare that growth with the previous Q4s, you will see that that number is significantly underwhelming, and that likely reflects the impact of the flooding incidents. And for the manufacturing sector, we saw that it came back to the positive growth terrain, and that is despite the issues surrounding production, such as FX issues, production constraints in line with elevated energy prices, and also slower consumer demand given high inflationary pressures. However, what caught our attention the most in the manufacturing GDP during Q4 was the food processing, or food, tobacco, and beverage processing in Q4. So that grew by about 4% compared to the decline in Q3, and that shows probably increase in food production in line with the increased demand that came with the festive season in Q4. And overall in 2022, the economy grew by 3.1%, which is slow down compared to which is a slowdown compared to about 3.4% annual growth rate in 2021. And that reflects slowdown in agricultural sector, slowdown in slowdown in manufacturing sector amidst an increase in goods in the service sector, especially for the agricultural sector. On a full year basis, the growth settled at 1.88%, which is the first time agricultural sector is actually coming below 2% growth rate since the NBS started keeping current data series in from 2009 up to date, and that continues to show that aside from the impact of security issues during the period, we also saw the combined impact of high fertilizer prices, which is limiting cultivation, as well as the flooding incidents, which also impacted the harvest during the harvest season. So the combined impact of those three factors primarily led to this significant slowdown in agricultural sector in full year 2022, while the manufacturing sector reflects what happened in Q3, where the goods was negative in Q3 by 1.91%.
All right, Abdulaziz, let's get a projection now for Q1 2023. We know it's definitely been a challenging quarter, for all of us. What are you guys expecting?
Okay, so for Q1 2023, we think the major factor that will be slowing down, we think growth will slow down in the first quarter of 2023, and we think the current demonetization drive will be a factor, particularly given that it is significantly hampering trading activities as well as production activities. So to put that in proper perspective, we saw that since the first deadline elapsed for the use of old notes from January 31st, before it was now being shifted to 10th of February and 17th of February, we saw that even during those periods, traders were reluctant to accept all the old notes. And also after the presidential address on February 16th, traders, everybody now started rejecting old notes, and of which, if we go by December 2022 numbers, the combination of the 1,000 naira notes and the 500 naira notes, they constitute about above 70% of the total notes in circulation. So that shows that if we are not allowed to be spending this high denomination notes, and given that the supply of the new notes is significantly below the demand, then it means that our trading activities will be hampered. So especially all these low ticket transactions, all the petty traders, so given their distrust in the use of mobile technology and the likes, and given the low mobile penetration in Nigeria, so all this will be slowing down activities in the trading. So buying and selling activities will majorly slow down and during the period. And if buying and selling activities is slowing down, then it means that manufacturers will also be planning ahead of that and be producing below capacity. So we should be seeing the trade sector, the trade sector's growth moderate to about 1.21% in line with Ford's estimates for Q1. That's compared to about 4.5% in Q4. And we're also seeing a slowdown in the manufacturing sector's growth as a result of the pass-through impacts of what is happening in the trade sector. And same for agricultural sector, the combined impact of election uncertainties, this current demonetization drive, as well as high fertilizers prices will continue to inhibit or will continue to hamper agricultural production during the period. So where we're actually seeing some form of positives in terms of increase in growth in Q1 2023 compared to Q4 in the ICT subsector, also in line and also for finance and insurance. So we think those sectors will continue to outperform, although the high interest rates and the elevated borrowing costs will be hampering credit creation for the banking sector during the period. Okay. So if we are cascading all together, we are majorly expecting goods to come between 1.7 1.8% currently for Q1 2023.
Okay, no problem. So we'll keep watching out for that. Obviously, it's all eyes now on that Q1 data for 2023. We'll see how much of an impact all of these headwinds had on growth. Thank you so much, Abdulaziz Kuranga, Sub-Saharan Africa macroeconomic strategist, Codrus Securities Limited. Thank you so much.
Thank you for having me.
All right, so I will take a moment now. When we come back, Commodities Market Update is next. Do stay with us. And for Commodities Market Update now, we have Bolanle Agbaje joining us now, Senior Analyst at FTC. Good morning. Great to have you.
Great to have you.
So we got that hot GDP number for Q4 yesterday. Was it in line with your expectations?
Yes, it was, in the sense that we know that the trend is in Q4, usually because of increased business activity during that period. We do expect that GDP numbers are usually higher, but we didn't do as well as what we did in 2021, given the challenges that we faced throughout the year. And obviously, the full year figures of 3.1% also declined compared to 2021, just because of all the crisis that we had faced. And obviously, we started recovering from COVID, in 2021, and then this stopped or halted because of the Ukraine crisis and how it affected all aspects of the world economy. So the numbers are great in the sense that non-oil sector obviously contributed even more towards GDP, which is what we've been asking for. The oil sector, as we expected, just because I think our production ramped up to about 1.3 million barrels per day during that period, and obviously we didn't reap the benefits of increased oil activity in that particular quarter. But all in all, it's great news. Although the only sad part about it is the fact that agriculture obviously contributed way less. I think in Q3 it contributed about 27%, and right now it had dropped. In Q4 it had dropped to about 23% in contribution to GDP, and that's not necessarily great, because going forward we do expect that there's more performance or increased performance in the agricultural sector, and obviously that's hopefully translates into increased funds in the economy when it comes to our reserves. So even though we had seen non-oil sector contributes way more towards GDP, you're not seeing that translate into the amount of money coming into the country in terms of export funding and all of that. So hopefully going forward we change this. Although when you're talking about Q1 numbers, it seems
Q1
like we're going back.
Normally, historically, Q1 is normally slow.
Yes, it's normally slow, but so it seems like with all the crisis, the cash crisis, and the disruption in the economy would obviously reduce this particular growth numbers even more. And we wouldn't be surprised if the growth numbers falls below 3% in Q1. In
Q1. Well, we're looking out for that for sure. But let's look at other matters now in the commodities market. And globally, obviously the drums of recession is already raging, but it seems to be slowing down. It seems to be slowing
down. So the Wall Street Journal released a report, and the report generally was a bit optimistic, and in the sense that they had interviewed some of the business people in the UK, in the US, and they realized that consumer confidence and business confidence is building up generally, although they're seeing risk of significant wage pressure, and that just speaks to the wage spiral effect, in the sense that when you have a situation where prices are higher, people in the economy obviously demand more wages, and once you get that, they spend more, and the cycle continues. So it's that wage spiral effect they're trying to also break down in terms of increasing interest rates. But also once that happens, you see increasing borrowing costs in the economy as well. But generally speaking, they're seeing the recession fears easing out in the UK, US, and some other parts of the world economy as well. And so it's great news for us. It seems like what central banks in some of those countries are doing, what the government in some of those countries are doing, is actually paying off, and it's working. Obviously, we don't expect that those economies go back to pre-COVID levels, but they're doing way better than what they had done at the start of 2022 in particular, because it was a peculiar year.
Back here too, recession fears don't...
Well, given the GDP numbers, it seems like we're still a bit far from, those recession fears. But going forward, it would just be nice to see. It's quite great that the election is already here, so we can definitely put that behind us, once it happens, and then we move on back to business, crunch time, getting our economy where it's supposed to be.
Yeah, everyone's definitely waiting for that countdown, so we can just put it behind us at this point. All right, let's look at the oil market now. We see Russia's announcement of a deeper supply cut. That seems to have added some
pressure,
some price action there.
Yes.
For Brent.
So obviously, I'm sure that it's affecting them significantly with whatever is happening now in terms of the fact that people are not obviously buying as much from them, and the price cap and all of that, the sanctions. So I'm sure they're trying to make sure that they have an impact on the price, and in actual effect, it translates into, or it starts affecting some of these economies that have imposed sanctions on them. But the good news for us in Nigeria, because that's what we do care about, is the fact that we can actually benefit from this. I saw that the NNPC released a report saying that our oil production has increased to about 1.6 million barrels per day.
Almost nearing that 1.8.
If that's true, it's great for us, so we can actually benefit from this. And we put behind all those oil theft, oil vandalism, security issues. I know most all the candidates that are competing for this election, they've in all their mandates, it states, security is a major challenge for them. And so whoever becomes the next president, we're hopeful that, the security issue is tackled significantly.
Optimistic at this point.
Yeah.
Well, let's look at wheat now. We see wheat prices coming down in the global market. That's good for us. We import wheat. Yes,
it's good for us, but it's still not where it's supposed to be. Wheat price currently at about $758 per bushel. Obviously, the reason why we're seeing that slowdown in the price is the fact that India had already increased production. But going forward, we do hope that the trajectory for wheat prices and corn as well, declines, and as net importers of, those particular commodities, we can benefit from the reduction in price.
And what's happening with domestic commodities market now? We know people were talking about stocking up before the election. How's that
so
impacting
the good
price?
thing is prices have tapered down marginally, because we're still in the harvest season, but it's still at record highs compared to, previous years. But right now, prices are either, they have either remained flat or, declined marginally. So that's great for us. And, I'm sure because of the cash crisis, that's also affecting sales of some of these domestic commodities. So it translates into lower prices in this particular period. So it's right now, generally, averagely, domestic prices.
Because even if demand, is trying to rise, there's still that issue of cash.
There's still that issue of cash. And yesterday, in particular, we had serious, issues with network when it comes to, moving money around digitally. And that obviously has affected sales, and I'm sure those are still the challenges that some of these marketers are facing in terms of domestic commodities.
All right, let's look at the currency market now. We see the Naira there's trading flat. Even though we're just
so like I mentioned, the demand for dollar is there, but it's not as significant as the impact on the cash crunch that we're seeing. So it's like a push and pull factor. On one hand, you're seeing the increase in demand for dollar, or most people want to save their money in dollars, but the fact that there's no Naira in the market is pulling the effect or the impact that you would have had on the exchange rates, Naira exchange rate. So that's the reason why you're not seeing a significant depreciation of our currency.
All right, let's look towards next week. What are we expecting for global commodity prices?
So next week is very uncertain, just because nobody knows how the election period would go. Although I'm seeing signs that, they've deployed the army, I think, to make sure that the election is safe. And so we do hope that it follows that same path. And if it does, it means that, from next week onwards, most banks would get back into business and make sure that whatever is happening in terms of this cash crisis can smoothen out and they can go by their day as usual. So what happens from next week is, just trying to get the economy to stay afloat.
And here, right here, we've been, begging Nigerians to stop, attacking the banks, stop, attacking their ATMs and all of that. We know it's quite frustrating, but at the end of the day, we're still going to move on.
Exactly.
And they still need to have
all
of that.
You can't really blame them. Some of them are, really struggling. Poverty is really
it's
intense.
tough.
Yeah. So some of them are just reacting based on how they feel. And it's just sad that that's the reaction that we're seeing. And there's not much being done in terms of, cooling the tension in the market.
Quite tough, because I'm also looking for cash.
The only thing right now is I'm hoping that the elections go well and go as planned, and then from next week we just move on. Yes.
All right, thank you so much, Bolale Agbaje, Senior Analyst, Financial Derivatives Company.
Thank you for having me.
All right, we'll take a moment now. All right, now to our next conversation. We see stakeholders and the international community have been listing out what the next president of Nigeria must do regarding taxes. They've said that we need to raise taxes even more to be able to meet up with world best practice. Join me now is Mr. Michael Ango, Partner and Head Tax Advisory and Regulatory Services at Anderson, Nigeria. Good morning. Great to have you.
Good morning. Thank you. Happy to be here.
So we saw the British High Commissioner there telling us that the next CEO of Nigeria must raise taxes to meet up with the world's best practice there. We say we have the lowest tax ratio in the modern world. How are you seeing this?
Well, it's not a hard or fast rule. There are many options, one of which, of course, is to raise taxes. There are other options, of course, to be more efficient in terms of government expenditure and utilizing what you have. But certainly, any fiscal policy plan for an incoming government will have to factor in how to raise revenue from taxes. And in this regard, I would say that one of the options that will be on the table is to see what the tax landscape in Nigeria is, particularly with respect to how we've been able to utilize our tax system in the last few years to raise revenue. Incidentally, the tax revenue collection in Nigeria has increased in the last few years. I think the latest figures out of the FIRS were about 10 trillion for 2022. But having said that, in the same period, we've seen significant borrowing by government. So what that means is that, expenditures have increased probably faster than collection has been able to improve. So yes, there will be a conversation about raising taxes, but I think that there are other options and that raising taxes will not be or should not be the first consideration in this regard. There are other options to look at the Nigerian tax system as it is already, improve efficiency. There are taxes that are not being efficiently collected, as it were, that already exist. In fact, I would say that there might even be opportunity to reduce tax rates in some instances. So, for example, one of the conversations that may come into play is reduce our common income tax rates and increase our value-added tax rates. Because again, if you're talking efficiency, you have to look at what taxes are easier to collect. Value-added tax and other consumption taxes are always easier to collect. So, in terms of even getting quick wins for government revenue, I would say that we'll be looking more at improving the collection of the taxes that we have now, rather than creating new taxes or necessarily increasing taxes, as it were.
And obviously, right now with the cash crunch, where we're seeing everybody, having to use, other banking and transaction channels to facilitate the transactions, is this going to play into, how the tax authorities are able to, collect tax, going forward? Are they going to be able to see everything that's happening right now with everyone not able to trade with cash that much?
Well, I have an unpopular opinion, and you may not like it, but I think that the first, as it were, cashless policy would actually help tax authorities. Because if you look at the fact that most people have had to migrate into online channels, and try to use whether it's POS, electronic transfers, it simply means that a lot of the transactions that were previously being done on a cash basis are now being done electronically. And what that means is that there's a trail, so we can track transactions, amounts of money that move around in the economy are easier tracked. And so the relevant taxes or the applicable taxes on such transactions can be easier tracked. If I were to buy a car from you today and, I paid you cash, it could be a transaction that will disappear. But if I make payment through, an online channel, such a transaction can be more easily tracked. So I would say that opportunities indeed exist, for tax authorities to improve collections through use of, in terms of, the online and migrations to, online channels. On the flip side, people then say, look, when, we have a largely informal economy in Nigeria, and so if people are unable to buy and sell daily like they do, it then leads to a shrinking in the, activities in the economy, and so possibly a shrinking in the GDP size. So, this is a challenge, but I would say that from the perspective of the tax authorities, what they should be looking at is how do we then use this as an opportunity, and also even for the monetary policy, regulator, they should be thinking of how do we move more of our informal sector into the formal sector, also improve the efficiency of the use of whether it's the POS, the USSD codes, and all of that, so that more transactions go through the financial system, and then of course, we can track those transactions, and then of course, if there are taxes to be collected, those taxes can be collected.
And obviously, we're going to have a new president at some point now. How should the next CEO address the issue of raising taxes and tax compliance? And, obviously, raising taxes, that's a burden on the people at this point.
Well, I wish you could tell me who the new CEO is so I could call him and advise him directly. But the reality is that, there would be need, of course, to study what is on ground. And so, of course, that the elections will end in possibly February or March if there is a runoff. And then, of course, if the new CEO is sworn in May, I expect that, there would be a transition period where a proper, look at what the past or the outgone administration has left behind would be done. So I think for me, what I would say is you need to appoint competent hands into the various, offices that superintend over fiscal policy in Nigeria. But more importantly, one of the things that need to be done is to do a holistic review of the current systems we have in place, whether it be our taxes, whether it be our policies, and then to fashion out something that will accommodate as many Nigerians as possible. Yes, our tax authorities, especially at the federal level, have done significant work in terms of automating tax operations. At the FIRS, very good work has been done with the introduction of things like the Tax Pro Max and all of that. But that is not enough. One of the important things that must be done is to ensure that there is a linkage between all the relevant, revenue collecting agencies, especially at the federal government, at the federal level. There is, at this moment, people work in silos. So you have the FIRS in one box, you probably have the NMPC in another box, you have maybe NIMASA and all the major revenue generating agencies not working together, as it were. So I think that's one of the major things that will have to be done. There has to be, coordination, proper coordination, and then there has to be consistency in policy making, consistency in policy implementation, and even in policy communication. So people have to understand what the new government wants to do and how it intends to do it, so that you can get public buy-in. And of course, there has to be, collaboration with, professional bodies, the CITN, ICANN, and other relevant bodies. And then we must not be shy to seek for technical support outside Nigeria, if it were IMF, the World Bank, and it were, and the others as it were. So I think that there's a lot of opportunity for the incoming government, and we are all excited to see what will come.
Right. A lot of opportunity and a lot of work to do for the next government. Thank you so much, Mr. Michael Ango, Partner, Head Tax Advisory Regulatory Services at Anderson. Thank you so much.
Thank you. A pleasure.
All right, now let's head on straight to the markets now. We have Will with the details. Will, Welcome.
Laddie, good morning.
Another day, another market.
Another day, another market. As in, I'm so happy because the NGX doesn't seem to be having this election jitters. You know, they did pull back on Tuesday, but we saw yesterday they're coming back strong, at least 0.23%. And that kind of like tells you what direction the market is heading and what investors are probably thinking at this moment. They're here to stay. Where else can they go than invest in the domestic equities? You know, the structure is really strange.
You might as well put your money somewhere.
Yes, you might as well put your money somewhere. And with the, you know, low interest yield for fixed income, I think equities seems like the best buy at the moment.
Yeah, with some stocks giving some incredible gains
at the moment. So we're seeing 0.23% uptake for equities markets. It closed really strong yesterday, 54,315.53 points. Equity cap still at 29.58 trillion naira. Thought it was going to get to 30, but it dropped, you know, down there. But we're still having hopes, fingers crossed. Now, sentiments were still bullish in the market. It drove that index higher. We saw, well, although we saw a sea of red for volume, value, and deals, the activity chart didn't do so well, but it's still a good buy because yesterday, Geregu propped the market up. It rose about 3%, and that's because of the news that Afreximbank bought 5% shares in that company, the power company, and that drove the market. Meant investors went gaga, and you know the share price rose about 22 naira 40 kobo. That's a huge one. Now, banking sector, we saw it up 0.25%. Consumer goods marginally up yesterday. Industrial goods was unchanged from the opening levels it had on Wednesday. Insurance 0.79 down, and oil and gas unchanged as well. Now we see month to date and year to date now printing 2.02% and 6% each, still in positive territory. Not so bad for the market. Total volume, as I mentioned earlier, was doing, but we see top trades now. ICO insurance displays GTCO from the top trades, bringing it to third position. Now ICO is up in first position. It had 16.18 million units of its shares traded in yesterday's trading session. Zenith Bank followed 13 million, and GTCO 12.38 million. Now look at the gainers for yesterday. Geregu, as I was mentioning earlier, Geregu gained 22 naira 40 kobo. It opened at 224 naira. Now it closed yesterday 246 naira. That's a big win for investors and the power sector. You know, we're going to be keeping our eyes on that. And John Holt followed, and Living Trust not doing badly, 7.55% up. Now we're going to talk to our analyst, Mr. Abdurrashid Momo, trader, TRLW stockbroker, is going to give us more insights as to what's happening. And do remember that GDP numbers came out yesterday, so it's going to be giving us some insights into that. Good morning, Mr. Abdurrashid.
Good morning, Will. How are you?
I'm very well, thank you. Now, we're seeing good numbers on the NGX. Market doesn't seem to be responding to, you know, cautious trading or election jitters. And GDP numbers came out, you know, the Q4 2022 GDP numbers came out 3.52%. Full year 2022, 3.1%, in line with World Bank's expectations. Yeah. What are your thoughts, as in the equities market did predict this? Was that what you were expecting as well?
Oh, well, basically, you know, I always say one thing, that the market is a discounting mechanism. Most of these things are actually priced in. The recent, you know, when there's a positive GDP, that means that's more confidence for the stock market. Basically, what we'll be looking at, and again, note that this figure is actually coming out within the same period as per any seasons. So, which is a double plus for the market for now. We expect to see the bull rally to be intact. But we are not likely going to see so much growth until those financials hit the market, you know, because what we are seeing so far is that we are seeing actually increase in volumes in most of these stocks, like the banking sector, but we are not actually seeing so much price appreciation. But give or take, it's a win-win for the investors and the traders at the same time.
You know, Geregu yesterday, that's a big one. 5% share buy from Afreximbank. What does that, you know, paint a picture? What does this mean for investors and the power sector?
Basically, Geregu, from inception when they listed this stock, I did one people about this price appreciation coming up. How will I say? Number one, I always tell people follow smart money. Just follow the smart money. Number two is that in terms of floats, how many of these floats are actually traded on the floor of the exchange? Number three, the 5% purchase by FEDA, which actually puts more confidence in the stock in terms of short, medium, or long term. I think investors should actually watch that stock. This is just the beginning. This is just the beginning in terms of price appreciation. And lately, what I've noticed that there's been, before the way Geregu was traded, today price will be flat, tomorrow will not see volume. But lately, apart from the 125 million units that was closed in favor of FEDA at a negotiated price on 21st of February at 100 Naira, Geregu trades in terms of number of trades has been on the uptrend lately. And in terms of even volume, I mean, we are seeing a lot of trades in that stock for now. So Geregu is not the kind of stock that you buy today, you will not see a market tomorrow. I think for now there's stability in the stock. Yes.
That's good. So we're going to be watching out for especially for the fundamentals of that company. A lot of people will be worried about that, but we're going to see how that plays out in the long run. And well, just a quick one. How do you think the market will close? Just one word. Is it going to be bullish or bearish for today?
It's as I speak to you, the whole indexes are in green. But not, it's just marginal ups, you understand?
Okay.
But the whole indexes are in green.
Okay.
NGX 30, 50, name them, they're all in green for now.
Okay.
Yes.
So we're expecting a bullish close at the end of today's trading session.
Yeah, possibly.
Thank you so much, Mr. Abdulrasheed Momo, trader, TRW stockbrokers, for sharing your insights with us on the program. Today's elections, we're hoping to see how, fingers crossed, see how the markets, will react to this.
We can have gains today, gains tomorrow.
Yes, more Geregu and Triple G happening, or other stocks, following in. And what are dark horses that are going to rise, after the election? So, Ladi, just
looking
get your
out
coins.
for all of that.
Yes, get your coins ready.
Looking out for all of that. Get my coins ready. Since I have no cash, but it's fine. All right, let's head on to London now. We have Juliana standing by right there. Great to have you, Juliana. Good morning. So, Heathrow Airport, Britain's busiest hub, has today reported a smaller annual loss as it continues to recover. It's like it's recovery now from the pandemic.
You're absolutely right. Good morning, Laddie. It's nice to be with you once again.
Great to have you.
We have had a slew of updates, actually, which is increasing market sentiment on the FTSE. Lots of companies reporting their full-year earnings of 2022. And as you said, not just Britain's busiest airport, Europe's busiest hub, Heathrow, have reported their take-home from 2022, which is a loss of £624 million. Now, it is quite a significant loss, but if you compare it to pretty much the pandemic year, the shutdown year of 2021, they had losses of £1.2 billion. So clearly they have recovered, and the outgoing chief executive, John Holland-Kaye, has described 2022 as very much being a year of recovery. And he said that 2023 is likely to be the year of the rebound. Now, there have been issues, so perhaps the trading update to investors this morning could have been better. But if you remember, there was a swift reopening early last year. Lots of airlines were putting out flights that people couldn't get on because there just wasn't enough staff. So many staff left the aviation industry in the UK after being put on furlough during 2020, and they just didn't return. So passengers were getting to airport. There were lots of social media footage of people queuing for hours, some even days, at airports to get on a flight. And then in the summer, summer, Heathrow decided to put a cap on 100,000 passengers a day. So that really slowed down their take-ins. But things are on the up. We did have a half-term recently. Lots of people were going away. Lots of bookings being made throughout the summer and to Christmas. So even though they're still 25% down on that pre-pandemic year of 2019, things are on the up for the West London hub.
And definitely no windfall tax there for sure. But the reports, UK supermarkets are rationing fruits and vegetables. Why are they doing this?
Well, why? According to scientists, it's got something to do with the weather. Apparently, there's been significant storms in the north of Africa, in Spain, where lots of this produce that's being rationed is coming from. And it's causing lots of issues, particularly logistics and transport. So we've heard from the big four supermarkets, that's Tesco, not yet Sainsbury's, Morrison's, Asda, and also Aldi, the German discount retailer. They are putting customers on notice that if you enjoy cucumbers, lettuce, tomatoes and other fruit and vegetables, you're going to have to be pretty selective because in certain places you can only buy 2 per item, in other places you can only buy 3. I don't think most people buy any more than that, but I suppose if you're a big restaurant you would be. So there are going to be issues. Lots of customers in the UK have already been complaining to the complaining platform, which is Twitter, saying that they're getting into the store, can't get their cucumbers, can't make their children their sandwiches in the morning, and really it just kind of doubles down on the heartache and the misery that shoppers in this country are going through already. We got inflation at double digits, shopping inflation according to Kantar, which kind of gives an overview of inflation in the UK. For shops it's at 16.7%. So not only are you paying double digits, the highest you've paid in decades for your food, you're now having to ration them. So it's not great, but it's got nothing to do with COVID, nothing to do with global supply chain issues. This is to do with the weather, which we get used to here.
Exactly, and I hope Juliana can get her salads later on after all of this blows out. Thank you so much, Juliana. All right, that was Juliana there giving us the details right there, what's happening in the UK. Let's move on to other markets now. We see Bitcoin started a downside correction from the 25,200 resistance zone, a steady decline below the 24,500 support zone. And we see the market still sentiments trending downward, but still within that greed range, ranging from greed to neutral at this point. Let's look at the market cap. 1.11 trillion, more than what we had yesterday, 1.43% up. Volume traded, that's down 11.90%. We see Bitcoin dominance still sitting pretty at 42.43%. Let's look at the price of Bitcoin this morning, $24,400, up 1.78%. Volume traded $28.64 billion after losing that 25K level. Price of Ethereum, 1,665, holding that 1.6 level as usual, 1.85% up. Volume traded $9.02 billion. So we'll begin to see some kind of recovery in the market now from the sell-offs, and it's reflected also the top alts by market cap, with BNB up 2.25%. But we see the biggest mover this morning, that's Matic. Polygon, 4.25% up, $1.40. Did have quite a pullback for the last 2 trading sessions there. So we're seeing some buying interest again after all the sell-offs. XRP, 39 cents, losing that 40 cents level. It's up 1.65% this morning. Let's bring in Olumide Adesina, our financial market analyst. Hello, Olumide. Good morning.
Hello, Daddy. Good morning. Thanks for having me.
Great to have you. So, Olumide, it seems to be the market seems to be getting some movement now up, because the market was looking like was ready to go down into extreme fear, but we're seeing some recovery. But it looks like there's still a lot of caution in the market.
Yeah, like you rightly said. But interestingly, if you look at the altcoin space, you see great upside, particularly in layer 1 blockchains that have smart contract capability. Take a look at Stacks, for example, built on the blockchain Bitcoin. It's up by more than 100% for the past week, and that's because of the Bitcoin NFT hype. We're also seeing other layer ones like Tezos also rallying more than 60% for the week, and that's pretty much because of the fact that they have a partnership with Google on cloud integration. So that also has increased investors' participation. So looking at it all around, the market's showing some great positivity, despite yesterday's report that highlighted the Fed's minutes on being very hawkish. But inflation data coming out tomorrow would also give the midterm direction on how things will play out. But that hasn't deterred investors from putting a lot of money into these smart projects, particularly those that have smart contracts capability. Let's forget there's another interesting altcoin, Conflux. It's also rallying by more than 100% in the past 1 week, and that's because of the scalability it brings to decentralized finance, and it's a big bulk in the Asian market. So, Aladi, while we could argue that yes, the Bitcoin is finding difficult to break above the $25,000 resistance level, we're seeing interesting signs that the altcoin space is taking the shine right now.
It's quite incredible. It seems to be altcoin season, but nobody seems to be calling it that at this point. It's just happening, gradually. And I'm wondering, when are we going to see a Bitcoin season again?
Well, I think it's hard to tell, but interesting signs are already showing that things might change very soon. If you're looking at the Nigerian election, for example, in the past couple of days, Twitter interest has even gotten so high that Nigeria has the highest interest based on Google Trend. And pretty much Nigerians are strong buyers in the Bitcoin space too. And also, we are seeing big financial giants also stashing into the Bitcoin market. So that also is creating support for Bitcoin right now. But it still all bends to how the US Fed plays with liquidity, because the US dollar still is a major factor when we are looking at risky assets, particularly the crypto market.
All right, even though we're expecting elections this weekend, what are you expecting for price movement in the crypto space this weekend?
Yeah, I think we're going to see the USDT NGN staying above the 750 mark on the P2P. But my take is that if we see a major win from the opposition candidate, definitely we're going to see sell-off, because that means the official, the private market will depreciate, and that also will boost the investor sentiment, because a lot of investors are pricing the fact that if they see the major opposition candidates winning, it means it's good fiscal outlook for the Nigerian economy.
All right, definitely watching out for all of that. Thank you so much, Olumide Adesina, financial market analyst. Thank you.
Thank you for having me.
All right, let's look at the top gainers counter quickly now. It's the STX stocks still moving, 82 cents, up 28.36%. We see Engine, not seen this in a while, on top gainers counter at Metaverse token. They're up 15.79%, seeing some price action at 56 cents. So that's how the crypto market is looking today. And that's it on the program today. Thank you so much for watching. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. And as usual, you can watch this again on our YouTube channel. Flip over to YouTube, search for Channels Television. You can watch all our productions. Thank you for watching. Ladi Williams. Bye for now.